Joining us now to discuss are two executives with a wealth of experience in this space. John Berger is the CEO of residential solar company Sunnova and former Ford CEO, and CNBC contributor Mark Fields. Good evening to both of you guys. Appreciate you being here. John, I'll start with you. In lieu of a major spending bill from Congress on climate, what can the administration do here?
Well, their hands are fairly tied. Executive authority is fairly limited as far as its impact upon the broader energy industry. So there'll be pockets here and there that they can make some differences, if you will, policy, maybe some of the loans of the DOE, Department of Energy. But largely in terms of tax credits, incentives, both on the hydrocarbon side in terms of cleaning it up, carbon sequestration, hydrogen, and then on the solar and wind side of things, you're really going to need and absolutely have to have Congress itself to act.
So, Mark, earlier in this show, we were talking about the semiconductor industry and how industry has really been pounding the table to get Congress to act where it otherwise may not have. And I'm wondering if you think that the auto industry and the clean energy industry just needs to be louder if this is so important.
Well, I think put it into perspective. When you think about the semiconductor issue, that's around getting more capacity here in the U.S. That's a pretty straightforward issue. Here you're talking about a once-in-a-lifetime energy transition, and that requires, A, a lot of capital, and B, if you want to speed that up, it's really important to have a public-private partnership on that, because if you leave it to the market on its own, it probably won't go at the pace that the politicians want it to.
So how can you get those public-private partnerships underway? I mean, you need funding for that too, Mark, right? Exactly.
And you saw from the infrastructure bill, there's about $5 billion that's earmarked for charging infrastructure. And the administration wants to put in about 500,000 chargers, which basically go along the interstate highway route, just like we developed the interstate highway system back in the 40s and 50s under Eisenhower. And so I think the issue going forward is the nation's going to need more than 500,000. So it's a good start. But then there's also private to private combinations that the Fords and the GMs are making with various charging companies. That's going to be necessary to make this transition and make consumers feel comfortable that they can charge their vehicle just as easily as they can gas up today.
So, John, if the administration can't hit home runs here, they're trying to hit singles, they're trying to hit doubles. The president's trying to harness what little executive action he can actually do here by funding cooling centers for people who don't have air conditioning and trying to use funding for existing housing programs so that people can buy air conditioning. But do you think that any of those issues will really be felt on the ground by people in the near term who are dealing with these heat waves?
Unfortunately, no. I agree with Mark that, if you really want to move and address climate change in a rapid fashion and have the energy transition happen at the pace that we need it to happen, you're going to have the power of the purse strings, which rests with Congress. So it's very limited. With that said, the market, the free market does have a big input on this. For instance, in electric vehicles, which Mark knows quite a bit about. You look at the price of gasoline at the pump, and that is driving consumers to electric vehicles in droves. Solar, what Sunnova does as a service and batteries. The high prices of natural gas, coal, and oil are inflating, and dramatically so, the utility prices across the country, and we expect that to continue. That is driving more and more consumers to companies like ours. And so you see these kind of fundamental energy market moves. They, in fact, may have more to do with what could happen and what will happen as far as the transition than any government policy that may or may not be put forth. There will be gaps, like, for instance, manufacturing in the solar industry and the battery industry. Some of that is predominantly in China, just like the semiconductor, which the Congress just passed a subsidy bill for semiconductors. That was a part of this bill that was killed. That is unfortunate. The Solar Energy Manufacturing Association did not get that subsidy through, and I would expect that to happen at some point in time. just for national security purposes, if nothing else.
So, Mark, I'll give you the final word here. John brought up gas prices and the transition to electric vehicles, but they're not cheap in most cases. And I'm wondering if you would have expected more people to start buying electric vehicles when gas is at $5 a gallon in national average, $6 a gallon and upwards in California. Would you have expected that transition to have happened in a bigger way than we've seen?
Well, as John mentioned, we're seeing a big uptick in market share. But the bottom line is,
but you're starting from a pretty low base.
Yeah, I mean, but even from a low base, supply is now a greater issue and constraint in the market than demand for EVs. And that has to do a lot with the supply chain issues. But it also has, as was mentioned, John kind of touched on this. When you add up all the aspirations of the various automakers on producing EVs over the next 3 or 4 years, there's going to be a huge capacity constraint on batteries and battery manufacturers. And that's why, making sure that there are incentives, particularly here in the U.S., to drive manufacturing here for that is an issue. There's a scarcity of some of the elements like lithium and cobalt. That's going to mean the development of new mining facilities, which is going to have to be fast-tracked by the government. But the bottom line is, with the high prices of gas, you've seen the prices of electric vehicles go up for those very issues. But the bottom line overall is right now it's a supply constraint, not a demand constraint.
Mm-hmm. We will see where it goes from here. We appreciate both of your time on this Friday evening. John Berger, Mark Fields, thanks so much.